So what I wanted to do today, as promised, right, is share with you the actual stocks that I own in my very own portfolio. And then I'm going to break down the criteria of how I chose those stocks and why I chose those stocks, okay? So again, guys, remember these 12, right, are my bricks, which pay out every quarter. And the reason I've got this crossed out, because whatever I do in this first quarter is going to automatically follow the same pattern every quarter after that, right? So I only have to really worry about my first quarter. Whatever stocks I have that pay out in January are going to pay out again in April, right? And then again in July, and then again in October, right? So the same pattern happens over and over again. Same thing applies for the month of February and March, right? It's going to keep that same pattern. Every 3 months, it's going to pay out again, okay? So if you guys are a little bit confused of what I'm talking about, guys, please make sure you watch that first video where I broke down into detail exactly what my brick and mortar strategy is all about and how I have it set up. So my bricks, again, pay out quarterly, and my mortar are the stocks that pay out monthly, meaning like it pays out every single month of the whole year, which is highlighted in this green line, right? So technically, I've got 12 stocks that pay out quarterly. And then number 13, stock number 13 is my mortar, which pays out monthly. And again, stock number 14 is also my mortar, which pays out monthly as well. But this one here pays out on the 15th, like right in the middle of the month, right? So I'm not going to double up with another monthly paying stock on the same time, right? On the same week, right? I'm going to diversify, right? The name of the game is always diversify. You never want to have all your eggs in one basket, okay? Right? And as you can see, once I start going through my criteria, you're going to see how there are several layers to the strategy, right? So today, I'm peeling back all those layers, all right? So guys, make sure you subscribe, because today I'm going to actually share with you all the stocks that I own in my portfolio going into that second month, right? I'm not going to share today the ones in April because right now it's too late, right? Since we're going into April, right? Remember I talked about the two dates that you need to know with any dividend stock is the ex-dividend date and then the payout date, okay? So the ex-dividend date is the date with what you need to own that stock by so you can capture the next time they pay out the dividends, right? So if you pay or if you buy that stock after, then guess what? You're not going to get paid the dividend, right? You're going to have to wait for the following quarter if it's a quarterly paying stock, all right? So if you guys are a little bit confused of what I'm talking about, again, please make sure you watch that first video, right? The first part of this series, okay? So, but today, because we're going into April, it's going to be too late for you guys to try to invest in the stocks that pay out the first week of April and maybe the second week of April too, right? So that's why I want to share with you which stocks are going to pay out in May. Since I'm only worried about my first 3 months within my quarter because I already know it's going to automatically repeat itself, right? So whatever I did for the month of February, whatever stocks I chose here, right, which you can see is stock number 2, stock number 5, stock number 8, and stock number 11, right? Because it's going to pay out in each week of the month, right? So anything I did in February is going to automatically repeat the same pattern in May, all right? So I'm going to share with you the stocks that I chose in February, which technically are going to be the same stocks that are going to pay out in May, right? And then again in August, and then again in November, okay? All right, so let's keep going, all right? So today, not only am I going to share with you the exact stocks that I pick that are going to be paying out in May. That way you guys have more than enough time to, like, you know, if you need to set up your own brokerage account, or if you need to go into, like, if you already have an account and you want to start researching and comparing and contrasting the stocks that I chose, by all means, please do. Because what I really want you guys to do is to share with me, like, in the comments below, what stocks you have that are paying dividends, or what stocks you're thinking about buying, right? That are going to fit in nicely, right, in the same strategy that I'm using. That way you can set up your own little cash flowing machine that's going to pay you out weekly, right? The brokerage I use is TD Ameritrade, right? So my little disclaimer, guys, right? I'm not a financial advisor. I'm not a stock broker, guys. At the end of the day, guys, you need to research what stocks are best for you and your strategy, right? Whatever your goal may be, whether it be short-term or long-term, right? So another benefit of the brick and mortar strategy is that not only is it going to pay you off in the short term, meaning like you're going to earn dividend cash flow weekly, but where this really pays off is long term, right? So not only am I going to share with you my criteria, but I'm also going to share with you another strategy or another system that I'm using to solidify my portfolio for long-term growth, right? And I didn't create it, right? The guy that created it, his name is Mark Lichtenfield. I hope I'm pronouncing that right? And the book he wrote is Get Rich with Dividends, right? So if you guys are interested, I'll leave the link below. Here's the book right here, guys. I highly recommend it, like, for my, you know, more analytically inclined viewers, guys. Make sure if you want to dive deeper on exactly how to research each individual stock, I highly recommend you guys go and get the book and read exactly more into detail how to, like, analyze and research each individual stock to fit whatever your goal may be, right? So his system is the 10, 11, 12 system, right? So, and again, like, this system is built for long-term growth, right? So again, my brick and mortar strategy, I'm just adding layers, right, to my very own strategy, right? Because my strategy is built for short-term and long-term, right? So what's going to handle the long-term growth here, like, remember, I made that little analogy, like that little snowball effect, right? In the beginning, you start out small, but if you keep reinvesting the dividends, this thing starts building and building. And what you really want to do is not only reinvest the dividends, but you actually want to keep adding money to this so you could kind of, like, you know, push it along and give it a little boost of momentum, right? So this thing starts growing and going faster and faster and faster, right? And before you know it, guys, this thing has a mind of its own, right? And where this really takes off is, like, you know, 15 to 20 years down the line, right? And what I'm talking about here is compound interest, right? So if you can see this little chart that I put in here, guys, right? So the example we're using in this chart is like an initial investment of $10,000, and it's assuming that you're going to reinvest the dividends, right? So every time it pays out dividends, you're just going to put it right back into the pot and buy more shares, right? So, and of course, like, I know, like, it doesn't matter, like, whether or not you can start out. If you're just starting out and you don't have 10K, like, I know TD Ameritrade, like, they force you to open up an account with the minimum of 1,000, right? So if all you have is 1,000, then start with 1,000, right? Remember, at the end of the day, I always use that little analogy, right? It's all like that little snowball effect, right? In the very beginning, you're slowly building. And before you know it, guys, this thing has a mind of its own, right? And going back to my strategy, so if you're just starting out, then maybe just start out with 3 stocks, right? Start out with 1 stock that pays out in January, 1 in February, 1 in February, and 1 in March. That way, you know, you're at least covered for every single month of every single quarter, right? Right? At the end of the day, your first goal is to have enough shares within a specific stock that every time they pay out, you're able to buy another share stock. Every time they pay out a dividend, you want to reinvest and be able to afford to buy another share of stock. Okay, that's your first goal in mind. So again, right, Mark Lichtenfield is the author of the book Get Rich with Dividends. Guys, if you guys are interested, I'll put the link below for you guys to grab the book. And again, right, his system is the 10, 11, 12 system. The 10 is the number of years you want to keep compounding, right? You know, I always make that little analogy, that little snowball, right? So technically, if you follow this strategy, your initial investment, right, you should be able to double it within 10 years, right? But remember, it's only taking into account reinvesting dividends, right? So this is not even talking about if you like, you know, keep investing more money into this, right? So can you imagine where this can grow to if you not only reinvest your money, but continue to put in more money? So that little snowball is going to grow even faster, right? Exponentially, right? So what I'm getting at here, guys, if you could look at my chart, right now, I just want to give you like a kind of like a snapshot of where you can possibly take your portfolio to if you have the discipline of continually reinvesting the dividends, okay? Right, so this chart is only taking into account reinvesting your dividends, okay? So if you say your initial start out yield is 4%, right, and you have a dividend growth, meaning like year after year, it continues to grow that dividend by at least 8%, then as you can see, we started out with 10,000, right? So after 5 years, then your new total is going to be about 13,199, right? So it's not a big increase, right? So remember that little snowball effect, right? In the beginning, it's going to slowly grow, right? But as the years go on, this thing starts growing faster and faster, and it has exponential growth, meaning like it's not just growing by 1 or 2%, right? So technically by year 10, you pretty much doubled your money, right? And this is, again, it's only taking into account that you're just reinvesting dividends, right? Meaning like you're not putting any more money into this, okay? But again, where this thing really takes off, right, as you can see here, where this thing really takes off is like year 15 or year 20, right? Because as you can see here, guys, all of a sudden, by year 20, you have like 6 times the growth, right? You exponentially grew this by 6 times, by a multiple of 6, right? So you started out with 10,000, but by year 20, now you have 60,000. And all you did was reinvest the dividends. So can you imagine what this can grow to if you're actually not only reinvesting your dividends, but you're actually, you know, investing more money into this? Guys, not only is it 6 times, you could like easily make this 10 to 15 times if you actually keep investing year after year, month after month. You keep adding more money, and at the same time, you're reinvesting your dividends, guys. You see what I'm getting at? And where I got it from is from Mark Lichtenfield, the author of the book, Get Rich with Dividends, right? So if you guys are interested in breaking down and analyzing a little bit more, right, I'm going to go through the overall criteria. I don't want to get too deep into it here. But, you know, for my analytical inclined viewers, guys, then I highly encourage you guys to go pick up the book. So now over here, as you can see, like I'm breaking down my criteria individually. Like what's the criteria for each individual stock? And then what's the criteria of how that individual stock fits into my overall portfolio, right? Like meaning like where does it fit as far as like what month within the quarter, or how does it fit in what week of each individual month, right? The first part of my criteria, by far, right, the number one criteria is it's gotta be a dividend paying stock, right? So I don't care if I had this stock for years now and it was beautifully, you know, growing its dividend and all that, but all of a sudden, like case in point, like we're going through this pandemic, like I don't care if it's not paying me, or if all of a sudden, like, you know, it's facing hard times and for whatever reason it stopped paying out dividends. Well, guess what? I'm not going to invest in that company anymore, right? Some of these criteria are like not set in stone, right? Like you got to be a little bit flexible, meaning like, you know, sometimes on average, the reason I set this criteria is to give me a goal to aim at, right? At the end of the day, you got to have a goal in mind to be able to aim at, to be able to want to at least try to reach that goal, okay? But one criteria that I have like no excuses, zero tolerance for is whether or not that stock is paying out dividends. Like if that stock or that company, for whatever reason, stops paying out dividends, well, guess what, buddy? You're not part of my brick and mortar strategy portfolio any longer, okay? So I'm going to sell all my shares within that stock, and I'm going to go back to the drawing board to research, okay, which stock is going to fit in, right? Which stock is going to replace that old company that is no longer paying out dividends, okay? Number 2, it's got to be, or it's got to have a proven track record of paying out dividends for at least 10 years or better, right? fortunately, like I mentioned before in the prior video, right, there's a list already made. They're called US Champions, right? So we don't have to go crazy trying to go out there and try to research from scratch what stocks have a proven track record of paying out dividends, right? The great thing is the list is already made for us. So all we really got to do is just go in there and find out what dates they pay out, right? So, and again, guys, if you want access to the list, I'll put the link below, right? It's called Dividend Champions. Like they break them down into like different categories, right? Depending on how many years they've got track record of paying out dividends, right? You have your dividend aristocrats with like, I think it's like over 40 years or better, something like that, right? And then the next one is Dividend Champions, which are 25 years or better. And then the next layer is Dividend Contenders, I think it's called, which have 10 years or better, right? But my personal criteria is I want a track record of at least 10 years or more, because not only during this pandemic, but the last, kind of recession we went through, right, was like 2008 to 2012, right? So like almost a good 10 years from now, right? 10 years ago that we went through the last, time that the markets got hit hard. So if they've been paying out for at least the last 10 years, then to me, that's a good criteria for future payout and future growth, okay? So that's number 2. Continuing on. Number 3, history of dividend growth. This goes back into my 10, 11, 12 system that I was sharing with you as far as long-term growth, right? It's got to have dividend growth of at least 10%, right? So if it's 8%, it's okay. After all, it's an average of all your stocks when you put them together, right? Some stocks are going to have greater than 10% growth, and some are going to be less, right? Let me show you exactly what I'm talking about here, okay? So we go inside our charts, right? We go here, Johnson & Johnson. Again, Johnson & Johnson is one of my all-time favorite stocks, right? So the way I research to find out the dividend growth, the easiest way for you guys to do it is you go to fundamentals, you scroll down, you see here dividend, right? 6.17% annual growth past 5 years, right? So as you can see, it's not exactly 10%, but I'm gonna average in all my stocks to at least be between 8 to 10% average of all my stocks, right? If I go back to my chart here, okay, I want to be in between 8 to 10%, right? Because my goal is right here, my 20-year mark, right? My goal is to have 6 times growth, right? If it grows more than that, then that's just icing on the cake, right? But my goal is to have 6 times growth of my initial investment, of me just strictly reinvesting my dividends, right? But I'm still putting in more money. So at the bare minimum, I'm going to have 6 times growth, okay? But again, guys, keep in mind, right? Another disclaimer, right? Investing in stocks, any investment you do, there's always risk involved, right? This is not guaranteed, but I'm layering my strategy enough with enough safeguards in place, right, that I have a very good probability of hitting my mark, is what I'm getting at, right? But at the end of the day, of course, any investment that you do, there's always risk involved, okay? Nothing's ever guaranteed. All right, so now that I got my little disclaimer out the way, let's keep going, right? So my criteria again is like history of dividend growth, right? You want to have a 10% average, right? So that's just one stock, right? But another stock that I own, let me go back here, right? Another stock in my portfolio is, right? So we know Johnson & Johnson is in the healthcare industry, right? If you guys remember in my last video, I told you, like, not only do I break them down in different months and then in different weeks that they pay out, right? Not only do I diversify when exactly they pay out, but I also diversify in different industries, right? So I have 12 quarterly paying stocks, right? So if I need 12, this breaks down each major industry into 11 different industries, okay? So it almost fell perfectly as far as like 12. I need 12, but it's only got 11. So I'm going to have to double up in one of the industries. And one of the industries that I happen to double up in is healthcare, right? So if I go back to what I'm saying as far as my criteria, so if I know history of dividend growth has to be 10%, right? But I know I already picked out Johnson & Johnson. And Johnson & Johnson, the dividend growth over the past 5 years has been 6.17, right? So now I know I got to make up some ground, right? Because I want to be between 8 and 10% dividend growth, right? My overall goal is 10. In an ideal world, it'll be, if I can hit my mark, is 10% dividend growth, right? But if I'm anywhere between 8 and 10, I'm still getting to my goal, okay? Right? Again, let me show you the chart. Right? I'm still getting to my goal. Right? My goal is to 6 times my investment. Right? After 20 years, I want to hit 6 times growth. Right? I want exponential growth. Okay? So in order for me to do that, I got to have a minimum of 8%. Right? But my goal is 10. Right? Always set yourself higher than the mark you want to hit. Right? Another little secret. Right? Whenever you're setting goals for yourself, always go above and beyond. Right? So that way, if you come in short, you're still going to hit your goal. Right? Does that make sense? Right? So my goal is 10%, but what I really need is 8%. Okay? That's what I'm getting at. So I don't just own one stock, right? And I'm talking about my bricks. I'm talking about my bricks that pay out quarterly. I got to diversify within my bricks to at least be able to hit that 8% growth year after year. Right? So what do? When I'm researching another stock that's going to pay out at a different month and a different week, right? Another stock, like remember, this is Johnson & Johnson, is in healthcare. So even though I'm diversifying in different industries, I already know I got to double up in at least one. And the one I chose is healthcare, right? So another stock I own, which happens to be in healthcare, is AbbVie, right? Stock symbol ABBV, right? Which is also in healthcare, right? As you can see, like this is the subcategory within that major industry is biotech, okay? So Johnson & Johnson, the subcategory was, I want to say pharmaceutical, right? So the subcategory is pharmaceutical. So technically, so I'm diversifying within that industry, right? So another stock I own is AbbVie, right? And let's check out the dividend growth in AbbVie, right? So as you can see, dividend growth, 18.50, right? So guess what? That's why diversification is the name of the game, right? That way you never put all your eggs in one basket. So because my all-time favorite stock is Johnson & Johnson, but didn't quite hit my criteria of 8% or 10%, right? Anywhere from 8 to 10%, right? I'm diversifying to make up ground, right? So this stock, AbbVie, actually is growing its dividend by 18.5%. Right? So we know AbbVie is one of the stocks in my portfolio, right? So let's start revealing the goodies here, right? And the way we find out when it pays out is we go to calendar, all right? And remember, right, as we can see, it pays out in May, August, November, and February, right? So we know the next time it's going to pay out is in May, right? I could go back in the history. So last time was April 14th of last year. So I can kind of guesstimate or at least get close to like, okay, I got to own this stock before April 14th of this year in order to get paid out in May, right, is what I'm getting at, right? But they're going to tell you way beforehand. They're going to declare like, okay, the next ex-dividend date is going to be April 14th or April 15th, whatever it is. They'll tell you way ahead of time. That way it gives investors enough time to buy more shares, right? AbbVie pays out in May, August, November, and February, right? So we go back to my little calendar, right? My little brick and mortar strategy. So now we know, right? We said it pays out in May, August, November, and February. And it pays out that third week, right? The 15th through the 21st. All right, we see one is 14, but for the most part, it's going to pay out that third week, okay? So now we know this stock here, stock symbol ABBV, is AbbVie, okay? All right. So now we got 1, 2, 3 more stocks to share with you so you guys can get ready for your next quarter, which is going to be in May, okay? So now let's go back to our criteria, okay? Next criteria, what percentage of cash flow is being paid out for dividends, right? So this is where the research gets a little bit deeper, a little bit more involved, all right? So if you guys don't like being so analytical, right, you might pass over this, but this is a good one to keep in mind, right? And again, like if you guys want to break down more, get deeper into how the research is done, all right, I highly recommend you guys go check out the book. It's called Get Rich with Dividends by the author Mark Lichtenfeld. I really hope I'm not killing his last name, right? Right? So this goes into play as far as my long-term strategy, right? Because I want to pick solid companies for long-term growth, right? To solidify my long-term strategy, okay? So not only is my brick and mortar strategy built for short-term, but again, where this really pays off is in the long-term, okay? All right, so another criteria is what percentage of cash flow is being paid out for dividends, meaning like the amount of money a company is earning year after year, for any specific year, how much of the earnings are they paying out as dividends, right? So if they're using more than 75% of their earnings to pay out as dividends, then that's a red flag, right? It's a red flag because number one, if they're using over 75% of their earnings to pay out dividends, then it's telling me that they're not saving enough money to be able to continue to run and grow the company, right? Because at the end of the day, right, remember, one of my criteria is to have my dividends continually growing year after year, right? So if they're paying out most of their cash flow in dividends, then that's a red flag telling me that they're not leaving enough money behind to continue to grow the company, right? And if they're not continuing to grow the company, then cause and effect, logically, they're not going to be able to continue to grow the dividend, right? Common sense, right? So, but what I'm trying to get at here, guys, this rule doesn't apply to REITs, like the companies or the stocks that invest in real estate, because real estate investment trusts, the way those type of trusts are set up, they have to pay out. They have to pay out their earnings to their shareholders, right? So they tend to pay out more than 75% is what I'm getting at. When it has that type of format, right? When it's a REIT, again, it's REIT, stands for Real Estate Investment Trust, right? So if you're investing into a stock that happens to be investing into real estate, which I do, right? One of my stocks inside my portfolio is one of my Mortar, stock symbol O, is Realty Income, right? Which happens to be a REIT, right? R-E-I-T. I hope I'm saying that right. Right? So they have to, right? The way that those type of trusts are set up, they have to pay out the majority of their profits, right? So of course, most of them that invest in real estate are going to be above 75%, right? So that's why that criteria does not apply to companies that happen to be investing in real estate, okay? Which are also known as REITs, right? And the way you know, the way you determine of whether or not it's a REIT, right? Again, stock symbol O, go here, Realty Income, right? It tells you right there. It's a REIT, R-E-I-T, right? Equity Real Estate Investment Trust, okay? It tells you, it's not a secret, right? So those tend to pay out the majority of their profits or their annual earnings, okay? So remember, this criteria is a red flag, meaning like, hey, keep an eye on this stock, because next year, if it happens to run into problems, it may not be able to have worst case scenario to stop paying dividends altogether, or it may not be able to continue the growth of that dividend payout, okay? But the number one criteria at the end of the day, as long as it's paying me dividends, and as long as it's got a proven track record of 10 years or more, and it's continually growing that dividend, then I'm okay with it. I'm going to keep riding it out, right? But I'm going to keep an eye on it. So a key indicator to show me whether or not it's going to be able to, like, is it stable? Is the company stable enough to continually grow the dividends year after year? A key indicator is the dividend payout ratio. But the best way, in my opinion, to calculate the dividend payout ratio, to like really give you a good solid snapshot of the stability of that company, is dividend payout using free cash flow, okay? So I'm breaking it down real quick, guys. I hope I'm not losing you guys, all right? It's not hard to do, okay? I'm going to show you real quick how I calculate it, okay? So if I go back here, if you want to get down and dirty and start like, you know, researching your stocks, right? It's very easy. You go back here to fundamentals. Right now we're at Johnson & Johnson. I go to my fundamentals, right? And we go to cash flow, right? All these are all the financial statements for each individual company, okay? Now we go to cash flow. So let's see if it meets our criteria, right? So I got it annually, right? I want to break it down annually. So I'm going to keep it simple, right? I'm going to go right into the most recent year. And again, the way we calculate it, we take our dividends paid and we divide it by cash from operations minus capital expenditures, okay? So now we go down. All right, so first, we're going to look, that way you guys can see where I find my dividends paid, right? Where is it? Where is it? Right here. Total cash dividends paid year after year. For last year, for 2020, the total amount of cash dividends paid, we're going to keep it simple, right? It's about 10,000, okay? So now we got the first part, right? So this was 10,000. All right, easy enough. Okay, so now let's go. We got to calculate the bottom number now, right? So the bottom number is cash from operations minus capital expenditures is going to give me free cash flow. Okay, so how do I determine that? All right, well, let's look for cash from operations, right? So again, all right, we're in our financials. So this is net income. We're scrolling down. Where are you at? Where are you at? All right, total cash from operations. All right, and we're going to stick to the most recent year, which is 2020, right? So this is, they dated January 03 of 2021, right? Which is pretty much last year, okay? So here we go. Cash from operations, saying the total cash they made for the year 2020 was about $23,500. Okay, we're gonna keep it round numbers, keep it easy. All right, but we said we need cash from operations minus capital expenditures, right? So we take this number right here and right here, right? Capital expenditures, right? And then if we minus capital expenditures, was about 3,000. All right, so let's keep it simple. Let's say 23,000 minus 3,000 is 20,000, right? Again, 23,000 minus 3,000 is 20,000. All right, so that's cash flow. That's free cash flow. So if we go back to our chart, right? What do we say? 23,000 minus 3,000. That's 20,000, right? Easy math. So if we divide that, I'm just trying to make it look nice here. Okay, so if we divide, you guys staying with me? Okay, so easy math. If we divide 10,000 divided by 20,000 equals 50%, right? You guys know how decimals work, right? We move that decimal point over 2 places and it's 50%, right? So guess what, guys? We're good. That meets our criteria, right? The criteria, if it was 75% or higher, that doesn't mean I'm going to stop investing in that company. That just means I'm going to keep an eye out, right? Every quarter after quarter, I'm going to keep an eye out for that company to make sure that it's still paying out dividends, right? It's when it gets higher than 75%, it's a red flag that, you know, next quarter or next year, they may have a down year and they may not be able to afford to continue to pay out dividends, or at least be able to continue the growth of paying out dividends, okay? Like, as long as my ship is steering in the right direction, like to reach my goal, then it's all good, okay? Now, my criteria as far as how each individual stock fits into my portfolio. My number 5 criteria, what is the dividend yield being paid out? Like, meaning like, what's the percent of dividend being paid out for that specific stock, right? The portfolio average, I want to start out at 4.7. There's a reason behind that. The reason why I want to start out at 4.7 as far as portfolio average, right? Remember what I said. my starting average, like if you guys just started creating your portfolio today, you want to start at least 4.7% average. Like if you have 3 different stocks, like one might be more than 4.7, one might be less, but as long as the average of those 3 or those 12 or however many stocks you have, dividend paying stocks within your portfolio, the average start out dividend yield you want is 4.7. Okay? The reason being, let's go back to my chart. The initial dividend yield on this chart, to hit that target of 6 times my initial investment, you want to start out at 4%, right? That way you at least know that by year 10, you have doubled your money. Okay, but where you want to start out is 4%, right? So I'm setting my goal, my criteria, right? Again, I don't make it exactly 4, right? I make it a little bit higher. That way I'm flexible enough. In bad years and in good years, right? I can cash in, right? That way I'm steadily growing my portfolio and I'm hitting my target. So what do we say? Another stock in my strategy, right? Another one of my bricks that pay out quarterly, right? So another one is AbbVie, right? So let's research AbbVie. What's the dividend yield on AbbVie? Stock symbol ABBV. All right? AbbVie is paying out 4.8%, right? So I'm good, right? I'm above 4.7, but remember, right? Even though this one's above 4.7, Johnson & Johnson was still under, right? So what's another stock, right? Remember, today I want to share with you all the stocks that are going to pay out in February, right? And then my next video, I'm going to share the next month in the quarter. And then the next video, we're going to share the final 3rd month in the quarter. That way you guys can see my whole portfolio. But I don't want to give them all at once, because I want to challenge you guys to learn how to research your own stocks and start picking and choosing which ones you like. So the next video, we can share and compare and contrast which ones you came up with, right? And then I slowly reveal to you each month which ones I have in my own portfolio, right? Drum roll, please. All right, another stock is T. Stock symbol T, which is for AT&T, right? Another one of those stocks that I love, right? But by far, my overall favorite stock is Johnson & Johnson, right? But stock symbol T is AT&T, which also pays out that 2nd month of the quarter, right? So February, week 1 is AT&T, stock symbol T. So next, my next criteria, does it pay dividends quarterly or monthly, right? Again, the brick and mortar strategy, first, I'm going to worry about filling in my bricks, right? First, I'm going to worry about my first 12 stocks on my bricks, the ones that pay out quarterly. I'm going to handle those first. And then stock number 13 is going to be my mortar, which happens to pay out monthly. And stock number 14, which is also my mortar, which also pays out monthly. Okay? Next one, continuing on. Which month within the quarter does it pay, right? If it's a quarterly stock. If it's a quarterly stock, which month, right? This is starting to go back into like my layers of my brick and mortar strategy, right? And again, the next criteria is which week within the month does it pay dividends, right? So again, the way I'm diversifying my portfolio is what month within the quarter is that individual stock paying out, and another layer is what week within that individual month is it paying out also, right? I'm just stacking on layer upon layer to safeguard me of any pitfalls that one of these companies may have, right? That way I got a solid brick wall that's potentially going to pay me out. All right, let's use the word potentially. Potentially going to pay out week after week, month after month, quarter after quarter, okay? Over and over and over again. All right, so far we got which ones pay out monthly, which ones pay out weekly, right? It's got to fit into my portfolio. They're always going to be great companies, but unfortunately, some of them or a lot of them happen to be paying out at the same time, right? So I'm going to try to pick out the best one that happens to fit into my portfolio, which also goes into my last and final layer, which is what industry it's in, right? So if I'm trying to determine if I got two great stocks, but I can't figure out which one to pick, right? Then my last and final layer is what industry is the stock in, right? Meaning like I'm not going to have all my eggs in one specific industry. All right, but I didn't forget, guys. I'm not going to leave you hanging, right? So the second stock I have in my portfolio that pays out that second week of the second month, right? Second week of the second month is stock symbol BX. Okay? So BX, and again, guys, I'm sharing these with you, but I want you guys, I challenge you guys to do your own research. All right, so again, BX, which is Blackstone Group, right? And it's in financials, right? So it's in another industry, right? Remember, guys, I'm diversifying in different industries, right? You want to diversify enough that you have your footprints in at least each individual industry, okay? All right, so this one's BX, so this one's going to be my second week in February, right? So you see here, right, like some of them are not set in stone. Like some companies are good at keeping that same track record of set in stone of exactly what week within the month they're going to pay out, and some don't, right? So unfortunately, we don't live in a perfect world, but I try to get it close enough. Like sometimes they paid out on the 11th, sometimes they paid out on the 10th, and sometimes on the 16th. What I'm getting at here is like sometimes they paid out on the second week, and sometimes they paid out on the third week. Right? So unfortunately, we don't live in a perfect world, but I try to fine tune this enough that I can get close enough to it. Okay. And then last but not least for today, this one is called Artesian Water. Right? All right. This stock symbol happens to have Artesian Water. It happens to be a utility that invests in water. Okay. Artesian Resources Group is what it's called, right? And again, it's a utilities. The industry is utilities, right? I want to make sure, again, at the end of the day, I go back to my industries, utilities, right? So guys, that being said, I'm going to end it right here, guys. And I hope you guys enjoyed today's video. And again, guys, I challenge you guys to like research your own stocks, right? And if you want to like dive in deeper into how to like analyze each individual stock, then I highly encourage you guys to check out the book. It's called Get Rich with Dividends by Mark Lichtenfield. I hope I'm pronouncing his last name right. Guys, if you guys are interested, I'll put the link for the book down below, right? Because I use that layer. That strategy is for the long term, but I put another layer on top of that, my brick and mortar strategy. I put the next layer on top of that so I can benefit in the short term as well, right? So that being said, guys, I hope you enjoyed today's video. And again, guys, make sure you subscribe for the next video where I keep sharing more and more of our brick and mortar strategy, our cash flowing monster machine, right? Built to benefit week after week, month after month for the rest of our lives, right? So at the end of the day, guys, that being said, trust your gut, follow your heart, bet on yourself, and double down. This is Diego Rodriguez signing out. Peace, and we'll see you on the next one, guys. Be safe.